Hello, my name is Nishant Malhotra and this is the first module on valuation. So let's see what we are going to be discussing in the module. So what is a valuation? We need to first understand what's the foundation of valuation. What is value? When we mean value, what do we mean when we say value of an asset class or a company? In order to understand valuation, we need to have understanding of financial statements. So we'll look at the three financial statements. We'll maybe do a deep dive into income statement. We'll have to understand risk. So we'll have a fair bit of topics on risk and capital structures. And in this module, we just give an overview. What I want to give you an overview here is what are the overview of frameworks and approaches to valuation. So before we start, let's look at various asset classes. We look at the classification of asset classes. So there are three classifications: equity, debt, and alternatives. We could have equity and debt, so that's anyway going to be covered in valuation. When I'm talking about debt here, I would be also valuing bonds. So that could be a separate section in finance, in fixed income, but it could also feature a bit of that particular course will also feature here. Talking about valuation, we are trying to understand the intrinsic value of any asset class. Some people want to value a company. We want to say this value is trading at a particular stock price. How do we arrive at that? This module is predominantly to value companies, firms. We'll look at the various models like we said. When we talk about valuation, one of the major things we're going to be using is the sum of present value of expected future cash flows. We're going to be summing the future cash flows. We would use the present value or cash as the most important method module. Understand present value, which is going to be the next tutorial after this one. To understand the time value of money and uncertainties with cash flows. This is very important. When we are talking about present value and expected future cash flows, you have to understand a bit about time value of money and uncertainties, because future cash flows always have uncertainties. We're going to be talking about value drivers. Now, this is what McKinsey found out two drivers which are very important. This return on invested capital, which we are going to be discussing. There will be a lot more ratios which we'll be discussing. For this module today, we're just introducing the concept of return on capital invested and revenue growth. These two things have to be sustainable. Now, these are the two variables which we'll look at create value within an organization. When we are looking at the value, like I said, it's about McKinsey. We see return on investment capital and revenue growth. Now, these two play a very important feature for cash flows. If you're generating cash flows, the other variable which we'll be looking at, cost of capital. Now, when you're generating cash flows and you're using debt, and you're raising money or capital to invest in and generate those cash flows, the return on the cash flows has to be greater than the cost of capital.